Welcome back to the channel, and today we're going to look at Shopify, ticker SHOP, trading live at the moment at just $69. And full disclosure, this is a position that I have already entered. I'll explain later the reasons and how I have structured the trade, which is with options. But as you can probably see from the chart, the stock has taken a nosedive quite a bit since late March, and that's something that is been happening across the board. So I do think that there's many stocks out there that are being beaten down due to the recent news from the Fed, as well as the deceleration in some economic indicators. So, for example, we had building permits very recently uh, at coming at numbers lower than expected. And so we see in many places this downward movement here. Having said that, I think this creates an interesting entry point for this stock, which, as you can see, has crossed the 50 SMA, has crossed the 150 SMA, and is just sitting above the 250 SMA. So with this one, the way I see this company in the competitive landscape is that many companies out there are struggling at the moment. And at the same time, you have still a pretty high concentration of new startups being launched, new businesses being created. So one of the things that I've noticed is that uh, when the consumer is struggling and organizations have problems placing their product out there, they have issues generating sales, they look for ways in which they can maximize uh, their revenue potential. So what tends to happen is that they start looking at all the revenue channels or the revenue sources, right? So with this one, as you can see, entry point at a pretty strong or near pretty strong support level. And that's the view I'm taking because we get earnings coming on the second. And with this situation that I see building up in the competitive landscape, I think there could be a surprise to the upside for that very reason. Now, for those of you who don't know Shopify, this is essentially a company that helps businesses place their product, right? So they automate part of the sales process. And what I think is interesting about the stock is that they don't only, service smaller or medium-sized businesses, but also they've been increasingly present in larger corporates. Okay. Now, with the subscription model, they have raised the prices on the standard plan by 33% in previous quarters with little to no churn. And I think that speaks highly about one, the validity of their business model and the value that they add to the customers. So uh, that is indeed a very good thing. I think it reduces the probabilities of them announcing, that they've lost a significant portion of their customers. But two, it has laid the ground for them to turn up the dial and do the same for their Plus plan, which is used by enterprise customers, right? Now, something that I think can happen is that as those larger customers stay within the company, but also uh, increase their subscription, that will have a positive impact on the revenue growth of the company. Now, what's also interesting is that Shopify historically um, has had a profit margin inferior to its peers, and that's just the reason in which the reason for that is the kind of service that they provide. They simply are not like your typical internet business. Okay. However, in the last few times, in recent times, they have refined their algorithms for audiences, and that has shown a reduction in customer acquisition of up to 55%. At the same time, they're leveraging some platforms like TikTok and Snap and Pinterest to reduce the cost of customer acquisition, which was a bit of a challenge for them in the past. Because if we look at the financials here, what we can see is that, okay, so revenues are growing nicely, which is good. Profit margin, right, for a company in this sector is a little bit low because you tend to see things more like 60, 80%. These guys, they tend to be more in the 50 to high 40%, right? And a bit of the concern that we have as well is net income in the past. So net income, as you can see, they had a terrible year here in 2022, and yes, that is a bit concerning. But the reason why that happened is because there were two main drivers. One, the bust, obviously, that happened following the stimulus, right, that was issued by central governments. So there was a boom and bust that followed that action. But also at the same time, they were trying to establish their own fulfillment infrastructure with which caused them to devote an immense amount of resources, but they're not doing that anymore. And so they have desisted from that effort. And so I think we will not see at least that factor incurring a negative income margin performance like the one that we see here. Now, from a performance perspective, the stock is a bit of a middle of the road year to date. So let me explain what I mean. I'm gonna uh, put this here so you can see that. So this is the performance of the stock, is the bar chart in red and green year to date, and I have compared that with some peers, but I have also included the S&P and Apple just for general comparison. So in terms of performance, these guys are year to date a little bit of middle of the road. But again, up until mid-March, they were actually doing kind of all right. It's only in recent weeks that the stock has moved into the underperformer territory. However, I think if the earnings report that is coming in 2 weeks is good, we could see the stock shooting up somewhere around the higher peers. I do think that is possible because when you compare it, you have, for example, the performance is just about the same than Apple, right? And Apple has been experiencing certain issues lately in terms of slowing demand, in terms of the legal issues that they are experiencing, and you do not have those kind of fundamental problems with this stock. So the question is, right, if the next earnings report is good, then there shouldn't be that kind of underperformance. The other thing as well, of course, is that Apple is a huge uh, market capitalization. So many investors rush into those names when they look for a flight to safety. And that's very much what has been chased recently by investors following the recent announcement of the Fed. Now, if we look at the price return, we get a similar picture. Again, year to date, it's not performing great, but it's not terrible either. We're talking about some high-profile companies here, such as Snowflake, that they are competing and they're performing better than those guys. But here's where things get interesting. So, uh, if we take the approach to assess the valuation of this company from an EV to sales perspective, because remember, we're looking at the tech space. In that respect, Shopify is actually among the top valuation performers. So it's not the most expensive, but it is at a healthy valuation. So I've put here Apple as a bit of a benchmark, right? To because also I think it's appropriate. It's kind of in the middle of the road across all of them. And what you can see is that Shopify is actually at an above valuation in that perspective, and certainly far above the laggards that we see here: GoDaddy, um, Squarespace, Wix. So if you take those names and go back to um, to this chart here, you can see how these stocks that we just went through that have a lower uh, EV to sales multiple have actually performing better. So I do think that in the event of margin expansion, which is what we're talking about here, not necessarily multiple expansion, that is going to aid the stock to reach to those levels. That's the kind of idea that we are looking here. Um, so there are as well uh, other things, other tailwinds why I think the stock can be bolstered in the near term. So uh, the market had anticipated rate cuts to have been announced by now, but this has not happened. The reason for that is because the inflation print was higher than expected against market consensus. That was a highly expected number. And of course, this is no longer the case. So the expectation that rates were going to be cut, no longer going to happen. So you see many companies out there with a lot of debt that are struggling, right? They are falling precipitously in the market. However, this company has uh, uh, the lowest debt to equity margin across the sector. So they have I think it's like 10% in terms of debt to equity, which is way lower than competitors. So we can work that out here. So total debt is 1 billion, right? 1.1 billion versus a market cap of 88 billion. So when you look at how flexible, how fast they can move, and obviously how they are going to be hindered as a stock due to the sentiment of rates being higher for longer, I think this is where they do have an edge against their competitors. And so if we look at that, we can work out here very quickly, right? We can probably work out uh, some kind of, yeah, net debt. And so let's do that for 5 years. Let's look at some of those companies we were looking at before. Apple, we got GoDaddy, I think it's GDDY, Net, Wix. Who else do we have? Twilio, snowflake, right? So you see that I'm going to remove Apple because it doesn't really add much here to the table. But you see how Shopify is one of the lowest. And so I think that's why it's a name that I'm gonna put in my portfolio. Uh, and the volatility as well. I have found an interesting uh, structure, which I'll discuss in a minute. Now, as for the company expectations, they have been quite optimistic about their ability to continue generating revenue and EPS growth. Some of the things that they have done to achieve this is the introduction of AI to add additional features to the customers. So that alludes for more functionality that of course, they can charge more for. And it also translates into a higher customer experience because they can do more things with the same service that they already had. So let's talk about the structure. I have entered this already on a ratio calendar spread. Let's go back to the chart here. Uh, so, so I've entered today, just before recording this video, at about a price of 69, and I have bought two 75 calls expiring on the 21st of June and sold one 17th of May $75 call at a price of 410 to 80. If we get to 85, that's a 2.15x return. That's the price target that I'm looking for. So that's it for today. Hope you enjoyed the video. Subscribe and see you soon.